Hello folks, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves what happened today and what does it tell us about the coming ones. We have a show 4 times a week. Every Monday through Thursday is broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, available to you there under the channel L.A. Little. You can subscribe to it, have it pushed to you whenever one is published. That's the easiest way to get it. Of course, you can always come over to the site, NeoTA TV, and you can watch it from there or get it from there. As far as the markets, it was another day down. Let's look at the numbers first. Dow was down 100. The NASDAQ really was the one that tanked today. Big cap technology hammered and hammered hard. Google back to 500. We had Microsoft down 2.5–3%. We had Apple struggling. A lot of volatility today. Huge ranges today on the indexes. 2 and 3 times the normal size. And it happened overnight with the Russian ruble and the interest rates in Russia being jacked up about 60%, trying to support the ruble. With the oil plunge that's taking place, that currency is getting hit and getting hit hard. It was down 20-something% at one point today, closed down about 5.5%. The market itself in Russia was hammered and then rallied back. Huge volatility. These are the sorts of times where fear really does grow. And even though you have the backdrop of the economy here in the U.S., appearing to be okay, you have huge volatility all around. Central bank intervention everywhere. And if you're not in one of those countries that's doing the intervention or threatening to do the intervention, and in particular I'm talking about Japan, China, and Europe, or you're not the United States, which has the economy going, then you're getting hammered in terms of price and in terms of volatility. So big moves today, big moves all across the board. We ended down 67. It closed almost at the lows. Got as high as 41.90. So you can see it was a little over 100, almost 101 points, I guess, on the NDX, which is a significant move. We're talking 2.5% a day, up and down. Composite also takes it pretty hard, down 57. The NDX composite were the losers. The Russell barely moved. It was actually up almost all day long until the end of the day when everything sold off again. And folks, that's like 5 days in a row or 6 days in a row that they've sold it at the end of the day, almost every day now. Did it again today. They were up big and gave it all up one more time. Gold trades higher. The dollar got hammered today. The yen had a safety move to it, and the euro as well. I suspect those are going to be just opportunities to short them again if you're so inclined. Oil actually traded higher. It's hard to believe, but it traded higher. But the problem with that is how it did it, and we'll look at that. Bonds go up to test the top. All the way to the top, they test it. They fell on price and volume. So when I look at oil trying to turn, and I look at the bonds, trying to finish it out here, so this and this is telling me that at least what has caused the turmoil seems to be finding, shall we say, a turning point. And if that's true, how far or how long will it be before these do the same? That's really the question and something to ponder. If we look at the trends, the qualified trends on the indexes and on the sectors, those of you that watch me have watched me for a while, I pay attention to this. If you look out here, they're all bullish, and if you look out here, they're pretty much all bullish as well. So long-term trends, bullish, check mark, all right, looking fine. Now these can't change unless you start getting deterioration here, and you can't change these unless you get deterioration here. So you always start with the short term and ask what it's doing. And if you look at that, it's pretty much bearish and a few sideways. Usually when you get 2 to 3 go bearish, then the rest of them try to join. So if you look over here, you've got bearish and bearish. This one changed today, and this one did too. So you got bearish, bearish, and this one I think is going to go sideways. If you look on the intermediate term time frames, these mostly are still bullish. And the reason for that is the huge move higher. XLB, XLE, those are the exceptions, right? Those are the two weakest groups. Those are the ones that have been really struggling. But if you look at these, unless consumer discretionary breaks down, or the industrials break down, or some of these others start to break down and start to join the two weakest ones, right? Then this is still holding, and this is still trying to hold as well. So it's still, on this time frame, it's kind of a half check mark. In other words, you kind of lost the top half of this check mark. It's still holding, and then here clearly you've turned bearish. That's usually the way it works, right? You're going to go bearish here, and you're going to try to pressure these. Now the way that typically works is that these start to bounce. They start to make a move back up, yet they don't get very far. So you see the big plunge, some sort of a bounce that fails, and then you come back down, and it's this failed bounce and the move back down that eventually starts to turn these. And so that's why I always say, you almost never get a crash off the top. You almost always have to worry about the bounce when the bounce finally comes. And the bounce in this particular case hasn't came at all. If we go over and start looking at the indexes to see what's going on, S&P 500 comes down, right? And actually let's pull over the weekly, because the S&P 500 was trying to do a bullish retest regen off this swing point high. Today it's under it, right? And this is on the weekly though, so it's not over. But if this carries and holds on the weekly, that's a bad situation, right? Because that says you're going back into some sort of a range trade. That kind of takes the whole bullish trade off the table. So when I look at it from that perspective, yeah, this is starting to turn serious. I mean, it feels like it's serious already given the decline, but it's when you start seeing the deterioration and the possibility of the bullish move more or less taken away is when you start to say, okay, now this is starting to get my attention. And that's pretty much where we are. And that's true not just on the S&Ps, but a number of the sectors as well. If we look at the Dow Jones, right, and as we move across these, this one's coming back is just as hard, but it's actually coming in, and I'm going to show the weeklies now on these. This one's actually coming in to do the retest regen off this bar, and as you can see, it doesn't have the volume, but it's trying to do a full retest regen. That's around 17,000. If you look at the two weakest sectors today, you've got a blowout of 3 swing point lows on the composite. Volume, of course, is expanding on the way back. But if you look at the weekly here, what is this one doing? It's doing a retest regen off these prior highs. Now, when I say a retest regen, you don't see a swing point high here. And again, in case you haven't been watching recently, this moved down. When it came back up, it came up so fast and furious that it was unable to create a swing point high here. In other words, we didn't have 6 bars. This blew it out on the 6th bar. If you want to call that a weakness in the model, you can. The model, when I originally designed it, and as I say in the book, it was a tight choice between 5 and 6 bars. 5 bars caught them all, almost all of them, 99.8 or something. But the problem with it is 5 bars gave you some false signals as well. So I opted for 6, which only covered about 90, I think it was 94, 95% of all cases. And so there are times when you get fast moves that you don't actually create the swing point high, and this is one of them. And you saw it already across a number of these charts. But essentially, if you think about it, that is the first test back to the prior highs, right? That's a key test, and it's a key test here on the NDX as well. And then if we move over to the Russell and look at the Russell here, the Russell actually has, if you remember, this had a range. The range was up here at the top, and inside that range there was like another one, and it's trying to create the reach the downside of that third range down, which is about halfway through this bar. That's going to be the test again tomorrow. If I look at all these indexes, if I look at the sectors, there still isn't anything out here to tell us this is ready to turn yet. It has certainly tried, to turn. If we go back real quick here and look at the S&P 500, just look at the way the bars are lined up. And I'm not going to belabor this, but this started at the highs, closed near the lows. Now this one actually started at the highs, went down, and came all the way back. That's the one exception. Started at the highs, closed at the lows. Started at the lows, went all the way up, gave it all up. That was the confirmation on the takeaway bar that indeed right here we knew something more serious was taking place. Those 2 bars. Follow through on Monday, start at the highs, close at the lows. Start a bit lower, go to the highs, come back and close at the lows. Start at the lows, go to the highs, come back and close at the lows. So you can see 5 bars of the 6 on this decline have made highs, closed at lows. That's a pretty negative situation, and there's nothing here yet to show that it's done. Switching over to the sectors real quick, and we do have the Fed tomorrow. We've also got petroleum numbers out in the morning, and that may have been why we tried to see a petroleum turnaround today. Switching over to the sectors, though, you got a daily failure here on a bullish retest regen on one of the most bullish sectors. So that one's trying to head back down. You're doing bullish retest regens on a number of these markets as you come back right here on the weekly, for example, coming back to do a bullish retest regen. That's true here. It's true on the financials, true on the industrials. I'm not going to flip all the charts up because they all look the same, but basically that's what's happening. Before we switch over, though, let's look at the XLE. XLE trying to finish up an ABC structure on the way down, 89.22. The low here was 78, so you got about 10.5 points. If you put it on to this top, that gets you down to about 72. And where are we? 72.51. This is almost done. So that ABCD structure, and I'll draw it in for you in case you didn't catch what I was doing, is right to there. Almost done. So this, just looking at it, is telling you, hey, this one's just about done. Now, can it get a small bounce and do it again? Sure. There's nothing to say this is over because it all has to do with oil. But you can see that the weakest sectors are reaching, shall we say, more or less extreme measures and are getting ready to try to at least stabilize even if they don't move higher. Which brings us to the oil market. So oil, as we've noted already several times, making this huge push to the downside. So you had a fairly stiff push here, some sort of a sideways type move, big, fast moves down, right? Today, look at the volume, reversal. That's a blowout type move on the lows. I can't say that this one's done, but when I look at it this way, this looks like it's just about done. And that's not just on the ETF. That was true on the futures as well. Looking at it on the weekly, you're going to have volume expansion here, a big volume expansion as well. So you can see that you're getting kind of the final thrust, if you will, at least for now, in the oil market. So at this point, you know, the big driver that's been really starting to take its toll the last 5-6 days on the market has just about finished. Now, the question will be is, once that driver goes away, you know, is that going to allow the market to lift? And that really is going to depend on some other things like technology stocks, but it's also going to depend on the currencies next and on the bonds, and we'll look at both of those. So here's the ABCD structure on the way back down on the dollar. That structure is a little bit farther to go here, but you can see it's going to try to take out this little support area. That's where all the volume is. Well, this one's actually farther down, but that's where all the volume is on this consolidation. That's where it's heading. That's going to be the test maybe as soon as tomorrow, given that the Fed is making an announcement tomorrow. That's on the dollar. If we look at the bonds, the TLT goes all the way to the top today. That top 127.68. Now remember, this is the spike high where they basically shut down the trading machines in the bond markets. And they came right back off and closed at the lows, but they left volume up there. And you know, when you get a huge high volume top, eventually it's going to come back to test it. That's exactly what it's done. And if you've been watching me, you know, for a long time, I've talked about this saucer type rounding bottom that was taking place that was going to try to push us back to the top. Well, it has. And if you look at that high, 127.68, you test it today, 127.72, you close underneath it, you don't have nearly the volume, okay? This one's already finished an ABCD structure on the way up, and so with everything in place, it looks to me like this one also wants to try to turn. So you got your oil trying to turn, you got your bonds trying to turn, at least the government bonds. Let's go look at the junk bonds, because that's been the other big story. If we go look at the junk bonds, if you remember last night, I said you had a big, I think I said it here last night, I know I wrote about it today, you had a big heavy volume, kind of a blowout move on the junk bonds, left volume, that usually is going to get tested, and it could get tested the very next bar. That's exactly what happens. Test it, gets under it, back over it, has less volume. That's a 2-bar reversal at the low. So your junk bonds turning, TLT turning, oil trying to turn. Now oil hasn't put in the low yet, but it may just be a blow off low, big bounce, and then come back, just like you saw the blow off highs in the bonds. Same sort of scenario. That may be what's happening there. So all of those external factors that have been putting pressure on these markets potentially are coming to some sort of a culminary move, a culmination in the move at this point. So that, even though it's not the indexes or the sectors, which are not showing it yet, the leaders of those things are starting to show it, which makes me think that you got some sort of a bounce starting to set up here. And again, I don't want to belabor it, but tomorrow is the Fed and tomorrow is the petroleum reports. They're going to be big numbers. They're going to create volatility again tomorrow. It does look like these indexes are going to try to trade down again, but you may see the buy the news, or you may see a pop on those petroleum numbers if they come out a little bit better than people are expecting. So, in world markets, you had big bounces in Europe, but that was because our markets were bouncing early. I suspect they're going to give some of that right back. Currencies I saw tonight were starting to trade back down, which is going to put the yen lower, which is going to move the equities higher in Asia. So I think you're going to see some sort of a stabilization in Asia, pressure in Europe, but that's only going to take back what was given. So that's really not going to change the equation, which means our markets probably open up about flat, maybe a little bit lower at worst, or maybe a little bit higher. So that's kind of a synopsis of where we're at. I've been working on a lot of stuff today, so I really don't have any specials, didn't have any questions. If you do have questions, want to ask me questions, I'm more than willing to take them. It makes for a better show in my opinion, but that's up to you. You can always pop over here. There's instructions on where to send your text and your email questions, and I will answer them on the show as time permits. As far as tonight, I'm going to leave it at that. It's going to be a big day tomorrow. Tomorrow really is the last big event, if you will, before the end of the year. You do have quad witching on Friday, but that's really just volatility. Tomorrow, what the Fed does and says is going to have a huge impact into the end of the year, because there's nothing else between now and then other than, you know, these collapsing currencies in some nations and this huge volatility as a result of the oil markets. But that to me looks like it's going to settle down now. It's really going to be what the Fed says and does tomorrow. Folks, thanks for joining me. Have yourself a great night, and I'll see you tomorrow. Good night.